Good morning, everyone. Infal, my screen is visible, right? Can you just confirm?
Yeah, it's visible.
And I'm clearly audible.
Yes.
Thanks. Good morning, everyone. A warm welcome to today's webinar. This webinar covers three important topics, which are e-invoicing, readiness and compliance, some VAT key regulatory updates, and also we are covering a small portion of AI-powered financial reporting. It's a module which will be discussed in today's webinar. Thank you very much for an overwhelming response to today's webinar. We have received a lot of registrations towards this webinar request. I can see participants are joining, but I'm just giving an intro about Crow and speaker's introduction, just to make sure that we are starting on time. Your eagerness shows that you are still keen to understand e-invoicing regulations, which is a very new mandatory requirement in UAE. Now e-invoicing has moved to the executions phase. People are now seriously discussing about how to proceed from the proposal discussion stage to engagement letter preparations. So we will be covering all these topics in a detailed way. There will be key takeaways in each presentations. So it's pleasure to invite everyone to this webinar on behalf of Crow UAE. I'm Deepak Variam, Director in Indirect Tax Practice at Crow. We are part of a global Crow network, one of the top 10 accounting and consulting network worldwide, operating across 140 plus countries with 40,000 people. Here in UAE, the global strength is matched by a strong local presence with 5 offices spread across almost all the 5 Emirates and with a team of 40 to 50 professionals in advisory, audit, and accounting divisions. We have also a support staff in India with 200 specialists working at a back office. With this structure, our tax and technology team brings together a regulatory expertise and digital capabilities to help our clients navigate the rapidly evolving tax landscape in UAE and also wider GCC region. Thank you once again for being here today. I can understand that there are so many webinars and knowledge sharing sessions happening. So it is our pleasure to welcome you all once again to this webinar. Just a few notes to help today's sessions run smoothly. During the webinar, all of you would be, by default, it will be muted. However, you are free to post your questions in Q&A session. After the end of the webinar, if time permits, we will look into these queries. Otherwise, we will respond to your queries by email. Towards the end of the webinar, we have given a link and a QR code for you to scan and submit your interest if you wish us to get back to us with any of the topics that we discussed in today's session. Let me introduce our speakers. I will be walking you through the e-invoicing regime or regulation and its compliance requirement. My colleague Umesh Bhatt, Senior Manager in Indirect Tax Practice at Crow, who will be discussing about the key regulatory changes in VAT regime. My partner Vineet Shah, Senior Partner in Tax and Technology at Crow, who would be giving some insights about a new AI-powered tool for financial reporting. The topics that I'm going to cover in e-invoicing is the implementation timelines, an overview about e-invoicing, its scope, its wider scope and exclusions, What are the activities that is excluded? What is the relevance of data fields and business use cases in e-invoicing regime? There is a slide talks about penalty regime for e-invoicing. How do we assess, like how do we start the implementation project with a readiness assessment? What could be the key changes before and after the e-invoicing implementation? An interesting topic, which is role of a tax consultant in e-invoicing implementation, which also will be covered in today's discussion, and some of the key takeaways for a smooth transitions. We will end the session with that key takeaways. This slides talk about like e-invoicing journey so far, quoting some important milestones with respect to invoicing in UAE. When we talk about e-invoicing, all this discussions is part of UAE Vision 2031, which is part of a digital transformation strategy by UAE government. Sometime in October 2024, the e-invoicing information portal was launched by MOF, followed by some amendments in the VAT decree law, which integrate e-invoicing requirements in the decree law for VAT. March 2025, we have witnessed MOF releasing Ministerial Decision 64, which details service providers accreditation process and criteria to become an ASP in UAE. ASP is nothing but accredited service providers for e-invoicing purpose. September 2025, we have seen two cabinet decisions released by MOF, which is 243 and 244, which detailing the scope and application of e-invoicing system. What are the excluded activities, record keeping requirements, and implementation timelines? Everything was mentioned in these two cabinet decisions. Towards October 2025, yes, Vineet. In October 2025, another cabinet decisions detailing an administrative penalty regime for e-invoicing also released by MOF. This slide summarizes all the regulatory aspects and supporting documents relevant to know the legislative background about e-invoicing. You can easily locate these publications in the MOF or FTA websites. If you would like to deep dive into what is the regulations requirements. However, in today's webinar, we are trying to cover most of these important key aspects with respect to e-invoicings. So before we understand the model or framework, we need to understand the components. What are the necessary components in e-invoicing? It is critical for business to understand these components when it comes to implementation of e-invoicing. Let's understand what is PINT AE specification for UAE e-invoicing, how it has been defined. So PINT AE specifies how an electronic invoice must be structured in the UAE. It prescribes mandatory invoice fields, data format, which is prescribed format is XML format. What are the UAE VAT requirements embedded into this invoice logic? This ensures all invoices looks the same from a data perspective. Currently, if you look at the invoice structure, it is not machine readable. There are so many texts embedded into each supplier's invoices. What government is trying to understand or achieve is to standardize the invoice format, which is machine readable. So that's why it is called digitization of invoices process. Next component is PayPal ID. What is a PayPal ID? Just like an email address allows messages to be sent to the right recipient, a PayPal ID allows invoices to be routed securely between sellers, buyers, and tax authority. So that's the relevance of PayPal ID in e-invoicing. PayPal ID is a combination of two components, which is country code and TIN number, 10-digit TIN number allocated to your business. The country code will be static, like a fixed number, which is 0235 represents UAE country code for PayPal ID. It is critical that your ERP masters should also contains these buyer's PayPal ID for e-invoicing purpose. If you do not have a PayPal ID of your buyer, the invoice is going to be rejected or failed by these during the ASP validation. The next component is UUID, which is also called a unique universal identifier. Every e-invoice in the UAE will carry a
sorry,
unique
friends,
system.
Deepak, your voice is disconnecting sometimes. Can you check it?
Yeah, I'm checking. Is it okay? Is it better? Hello, is it better now?
Yes, I can hear you clearly.
Okay. So let's continue. UUID is a unique universal identifier. Every invoice in the UAE will carry a unique system generated UUID that cannot be reused or it cannot be duplicated. That's the main purpose of having a UUID. So UUID ensures invoice integrity and supports the UAE move forward a continuous control transactions controls. Data keeping requirements, as you know, VAT law prescribes you need to keep certain period your invoices for a minimum period of 5 years for normal transactions and 7 years for real estate related transactions. The same rule applicable for electronic invoicing requirement. What is an ASP? Accredited service provider is another component in e-invoicing. ASP stands for accredited service providers. These are the gatekeepers between suppliers and buyers and also the tax authority. Appointing an ASP is a mandatory requirement as per invoicing regime in UAE, because this was not the case in Saudi Arabia, because there was no ASP in middle for Saudi Arabia invoicing model. It is also called clearance model, where the suppliers can integrate their system directly with the tax authority, and the tax authority in turn reviews and approves these invoices, and then it will reach the buyers. But that was not the case in UAE. So let's understand what is the model, that framework we call it as five-corner PayPal model. Just like a mobile network connects callers through licensed operators in UAE like Do and Etisalat, which is they both work under a common standard. The PayPal ID, the five-corner model, connects buyers and sellers through an accredited service providers securely, and it is highly secured platform. That is why it has been recommended for UAE invoicing purpose. So you can see on this diagram, you can see 5 parties appearing in this model, which are corner 1 to corner 5. On the left side, supplier 1, which is also called corner 1, which is a supplier, submits an electronic invoice data in an agreed format, which is a structured format, PINT AE format. This is called PayPal International Standard Format for UAE purpose, UAE invoicing purpose. So supplier will issue an invoice in a structured format. Upon receipt of this invoice data in PINT AE format, they have to submit this invoice data to corner 2, which is the appointed ASP of the supplier. So what C1, C2 does, they will validate these transactions, which the invoice data contains. There are certain mandatory data fields. Those validations will be take place at corner 2 level. After necessary validation, C2 transmits this in e-invoice in XML format to buyer's appointed ASP, which is corner 3. So buyer also need to appoint their ASPs as per the timeline prescribed in the guideline. In parallel, C2 reports the tax data informations. There are not all the mandatory data fields will be reported to FTA. So but there is a requirement from corner 2 to submit certain invoice data to FTA on a simultaneously. Then C3 will receive this invoice details in an XML format from corner 2, which is the appointed ASP of the buyer. C3 submits this electronic invoice to buyer, which is corner 4, in an agreed format between corner 3 and 4. So upon successful validation from corner 3, Corner 3 is also required to submit this information to Federal Tax Authority. So there is a two-level data that FTA is requesting from Corner 2 and 3. The data that Corner 2 is sending is related to output tax details of Corner 1. The data that Corner 3 is sending the input tax details of Corner 4. During this whole process, C file, which is Corner 5, sends a message level status to Corner 2. Once the TDD data has been successfully reported, FTA also sends a message level status to Corner 3 once the TDD data has been successfully reported by Corner 3. Let me explain further on this scope. What would be the scope contains in e-invoicing? E-invoicing applies to all business transactions. The only exclusion they have given is B2C transactions, and there are certain excluded activities which I will describe in other slides. So all business transactions carried out by any persons and government entities will be covered in the scope unless it is specifically excluded in the e-invoicing law. In other way, we can say that it's applicable to all business transactions regardless of the VAT registration of the businesses. So then not mandatory that a business need to be registered for VAT for e-invoicing. That's a misunderstanding. Even if a business is not registered, as long as they are making B2B supplies or B2G supplies, those companies need to be implementing e-invoicing in UAE. Another important aspect, it's not only applicable to UAE business, it is also applicable to non-resident companies or non-resident entities having taxable supplies in UAE. They might have registered in UAE for VAT purpose as a non-resident entity, but since they are making taxable supplies, they are required to be registered for VAT, and these transactions will also fall under the e-invoicing regime. So they have to implement e-invoicing even though they are non-resident companies. So the key takeaway from this slide, all business transactions are in the scope regardless of the VAT registration status, place of incorporation of the business, nature of supplies, whether it's an exempt or out of scope supplies, that will also fall under the invoicing scope. Regardless whether they are free zone entity or non-free zone entity, designated free zone entity, doesn't matter. They all need to adhere with the invoicing regulations. The only exclusion is B2C transactions. At present, it has been excluded. I'm sure by now, most of you know the mandatory timelines for e-invoicing. It is done in a phased manner in UAE. It is a phased-based approach based on the revenue. The table below provides the timeline for all persons, government entities to appoint an ASP and also implementing e-invoicing. For entities having equal to or more than 50 million revenue will go live by 1st January 2027. All other businesses will go live by 1st July 2027, where their revenue is less than 50 million. So businesses in phase 1 need to onboard an ASP by 31st July 2026, and the businesses following phase 2 will appoint an ASP by 31st March 2027. Government entities are getting an extended timeline till October 2027 for implementation, but the appointment of ASP need to be done by 31st March 2027. MOF clarified that all businesses, regardless of their revenue, they can voluntarily implement invoicing from 1st July 2026. If your system is ready, your resources are ready, you can go ahead and implement from 1st July 2026. But the penalty regime is only applicable when it is mandated to implement. So which means its penalty regimes will only start from 1st January 2027. I wanted to touch base on the excluded activities or excluded transactions. This exclusion list was categorized by transactions provided by government entities and airlines and financial sector businesses. If transactions conducted by government entities in a sovereign capacity and not in competition with the private sector, these transactions are currently excluded for invoicing. Similarly, certain international transportation services provided by airline and any ancillary services provided directly to a passenger by airline is excluded. But please note, international transportation services of goods provided by airline with an airway bill, they have a grace period of 24 months. This exclusions only applicable for a certain limited period, which is 24 months, 2 years from 1st January 2027. Lastly, financial services which are exempt from VAT point of view, as per Article 42 of the executive regulations, are also excluded from e-invoicing framework. Let's dive into a certain specific transactions covered under e-invoicing scope. The first one is transaction between members in the same VAT group. If transactions are between members of the same VAT group, we know generally that the volume is very high. They follow certain mandatory requirement to understand the pricing between members. They might be using a specific accounting platform for billing purpose. So even regulatory authority understand this complexity. Because of this, they have given a grace period of 2 years for extending the invoicing implementation for intra-VAT group transactions, meaning they have given this extension for businesses to set up this properly for invoicing purpose. So that means from January 2029, any intra-VAT group members transactions requires a e-invoice, electronic commercial invoice need to be raised. I'm not saying that it will be a taxable transactions. I'm saying they have to issue an electronic commercial invoice without VAT. So that's the requirement for intra-VAT group members transactions. This slide discusses certain business scenarios where we analyze the applicability of e-invoicing. If in the first example, and by the way, these informations are coming from the guidelines released by MOF recently. In the first example, ABC Holding is merely an investment holding company. Their revenue consists of only receiving dividend income from a subsidiaries or any other intercompany related party, or they might be receiving a bank interest. No recharges happening from this holding company to the related parties. In that case, they are only earning a passive income. We can say that they are earning passive income. In that case, there is no requirement for this company to be in the e-invoicing regime or framework. They can exclude e-invoicing implementations for these holding companies, provided there is no management fees recharged from this holding company to their related party. The other two examples in the slide discuss about intercompany recharges, not in the same VAT group, just for assumption purpose. Assume that they are not in the same VAT group, where there is a requirement to issue a tax invoice for VAT purpose and also e-invoicing purpose. They have to mandatorily implement and issue an electronic tax invoice for e-invoicing purpose. So the thumb rule, if a company merely making passive income by way of a dividend income or a bank interest, e-invoicing is not applicable. In all other business transactions, whether it's an exempt supplies, out of scope supplies, the e-invoicing regimes will be applicable. Let's understand data fields. What is data fields? Mandatory data fields contains in electronic invoice. These 51 mandatory data fields that you see on the screen for an electronic invoice is as per the PINT AE format, which is prescribed by the MOF. Mandatory data fields are like I would say backbone of electronic invoicing system, because they ensure that every invoice carries consistent, standard, complete information for in a machine readable format. Let me give you some example from these mandatory data fields. You will see under invoice, under this section, payment due date has been considered as a mandatory data field. And invoice, let's say, take an example. Invoice was issued 1st March 2027. in the next year with the 30-day payment terms. In that case, invoice issue date will be considered YYY MMDD format. Similarly, you also need to mention payment due date in YYY MMDD format. So in VAT law, as per current VAT law, it does not mandate to issue or make mention the payment due date on the invoice, tax invoice. It only says payment terms is 30 days, 60 days in a text format. But for e-invoice purpose, you need to specifically mention a date, and that date format will follow YYY MMDD format. Another example is tax scheme code. What is seller tax scheme code? A code identifies a tax regime under which the seller is registered. For example, for UAE VAT, the scheme code typically mention the word VAT on the electronic invoice. Similarly, buyer electronic identifier. This is another mandatory data field. So buyer electronic identifier is nothing but the PayPal ID, which you are using in your master data for generating or issuing a tax invoice, electronic invoice to your buyers. So without PayPal ID, you will not be able to issue an electronic invoice to your buyers. Another example, tax category code. You need to identify what is the category, tax category that you need to select and transactions. So you need to understand what is the VAT treatment for applicable in that invoice. And why it is mandatory. VAT law allows the descriptive text. You can say, you can mention that this is subject to standard rated tax, or this is subject to RCM, reverse charge mechanism. But e-invoice requires a code. So then only the machine can understand this code belongs to this tax category. So every tax category, you will need to mention a code. Similarly, for tax rate, tax category rate, you have to mention 5% VAT on the invoice if it is a standard rated taxable transactions. But system will not understand whether it is a 5% or not. They just need to mention whether the tax rate is 5%, 0%. So you will mention only 5 and 0 based on the tax category which you are selected. So this is why the data fields are important. You need to capture these data fields into your ERP system to issue a valid electronic invoice. Now let's understand, we have talked about mandatory data fields. Now let's talk about what is conditional mandatory data fields and optional data fields. Okay, this slide describes the difference between mandatory, conditional, and optional data fields. So mandatory data fields are the minimum required informations without which any electronic invoice is considered valid. So without that mandatory information, you cannot issue an electronic invoice. So these fields must present on every invoice, e-invoice, regardless of the transaction type, because they allow this mandatory data fields allow the system and the FTA to identify who are the parties issuing this invoice and what the nature of the transaction, what is the VAT outcome out of this invoice, etc. So that's why it is called mandatory fields. For example, supplier TRN, supplier address, invoice number, VAT amount, the VAT base amount, all this will be considered mandatory data fields. But when it comes to conditional data, mandatory data fields, conditional data fields becomes mandatory only when specific transaction scenario arises. For example, they have given 16 use cases. MOF have listed 16 use cases for invoicing purpose. Out of the 16 use cases, they have identified 8 use cases which requires additional conditional data fields. So if it is a free zone transactions, that falls under conditional mandatory data fields requirement. If it is a reverse charge mechanism transactions, again, there are certain conditional mandatory data fields need to be done. So it's not just 51 data fields need to be incorporated. Based on the scenario, business scenario, you may require to add more data fields into your ERP system for while issuing an electronic invoice. Optional data fields are required for, it will be good to have optional data fields. For example, if you want to incorporate your purchase order number, contract project reference numbers, payment terms, bank details, all these are considered as optional data fields for electronic invoicing. You can see some sample predefined code list in this diagram in this slide, which need to be configured to ERP. So yeah, every invoice type, there is a tax code, there is a tax category code, payment methods. All these codes need to be embedded into the electronic invoice. The key takeaway, all these fields must be mapped and stored into the ERP system in your business. Now we know there is a requirement to issue an electronic tax invoice and electronic commercial invoice. So what we have done for simplicity purpose, we have listed some of the business scenarios that require a tax invoice, electronic tax invoice, some scenarios that require a commercial invoice. Under electronic tax invoice category, you can see all domestic B2B supplies and B2G supplies are incorporated with 5% VAT or 0% VAT. Exports will be covered under e-invoicing regime. That's why you have seen 0% transactions are listed there. Local supplies with applicability of domestic reverse charge mechanism will be part of invoicing. What currently MOF have clarified, only import transactions considered as import of goods or services are excluded, but this exclusion is not applicable to domestic reverse charge transactions. Domestic reverse charge transactions applies to certain transactions, includes supply of natural gas, precious metals, precious stones, transactions, scrap sales, all this considered as domestic reverse charge mechanism in UAE. So those will be under the purview of electronic invoicing. Similarly, commercial invoice transactions, we have listed exempt supplies, out of scope supplies, supplies by non-VAT registered persons will also part of commercial electronic invoicing criteria. And as discussed in the previous slide, VAT intra-group supplies. This will also fall under electronic commercial invoice requirement from 1st January 2029. I have copied a machine readable electronic invoice from the Ministry of Finance guidance. This will look like this can be readable by a human being, but the data behind this electronic tax invoice is an all XML format. But what we are trying to achieve is standardizing the tax invoice and commercial invoice format. The 16 MOF use business cases ensures, this is the 16 use cases I was referring in my previous slide. This ensures that UAE e-invoicing works consistently across different transactions. These 16 business use cases published by Ministry of Finance, it's not just a technical scenarios, it's a business use cases. There will be VAT implications on each cases. This is where our job, like as a consultant, our gap assessments begins from this analysis. What sort of business use cases that you have in your business for e-invoicing purpose. And as I mentioned in the previous slide, depending upon each scenario, business scenario, the data fields requirement will increase. So you need to identify which scenarios that you have in your business, and based on that, the data fields requirements will increase. So that need to be correctly mapped for each scenario in your business. With respect to export, what we have done in this slide, we have categorized certain transactions where you can identify what is the current invoice, I mean, before e-invoicing regime and after e-invoicing regimes. We have only given some sample transactions. Let's talk from the export perspective. Before e-invoicing, the invoice simply contains, it says that 0% VAT, which is applicable to considered as zero rated supplies. We need to attach supporting documents, which is proving that, okay, this is an export transactions. But in e-invoicing regime, you have to select a VAT category type as Z, which is representing zero rated. So it's the mandatory data field. You also need to select a delivery country code, need to be selected from a predefined list. So there is a predefined list, which from that list you need to identify which is who is the buyer country, who is actually the recipient of this export. The credit note, with respect to credit note, the original invoice number mentioned on the credit note with a reason for issuing a credit note need to be mentioned in the current VAT law, as per the current VAT law in the current scenario. But in e-invoicing regime, the original invoice number and date invoice type must be selected as 381. This will be a representation number and the reason for reduction in pricing, whatever is the reason that need to be defined, selected from a predefined list. So this will be a scenario for credit note within e-invoicing regime. Regarding reverse charge transactions, we are only discussing about the domestic reverse charge mechanism. As I mentioned, certain transactions falls under domestic reverse charge mechanism, and this will be only applicable in that scenario. It's not applicable for import of goods or import of services. So in reverse charge mechanism transactions after e-invoicing implementation regime, so you will select reverse charge AE is the tax code or the predefined code for identifying domestic reverse charge mechanism. So that will be a change from e-invoicing implementation timeline from that date. Lastly, the deemed supply case. Currently, it is not mandated to issue a tax invoice for deemed supplies, but you need to pay VAT and pass the necessary accounting journal entries in your system. But for e-invoicing purpose, you should always select a dummy code, which is always a selected predefined PayPal ID for these transactions in case if you are not issuing an electronic invoice. So you don't need to issue an electronic invoice, but it is a reporting obligation to the FTA that, okay, this is considered as a deemed supply transactions. Now, I wanted to touch base on the system compatibility to successful implement an e-invoicing environment. The system must do not just invoicing, issuing an invoice. They must support the real-time basis invoicing system. That should be a structured format. Firstly, the structured data requirement need to be met. Your ERP and accounting systems must be capable for generating a structured electronic invoice data. Secondly, the ASP integration is very critical. Businesses must integrate their system with seamlessly to the ASP, the appointed ASP. Typically, through this happens through the API integration or other methods of integrations, which is SFTP method integration or data converter integrations is possible. Thirdly, the master data quality, the quality of your master data. And so there will be a one-time job during the implementation period for ASPs to clean up your master data with all the TRNs, the buyer's PayPal ID, etc. Security and storage is also very critical element when it comes to system capability. E-invoices must be transmitted securely, authenticated properly by each parties, and stored in as per the recommendations or regulations provided by the tax authority and MOF. Finally, the scalability and control. Currently, B2C transactions are not part of e-invoicing regime, but later, maybe tomorrow or after down a couple of years down the line, there is a requirement for you to have B2C transactions to be incorporated into your e-invoicing. So the scalability part is also need to be considered when it comes to system capability. I'm just quickly giving you a heads up on penalty regimes. This is the information that is available with us from the Ministry of Finance. 5,000 dirhams penalty is applicable if you do not appoint an ASP. AED 100 dirhams per electronic invoice or credit note if you are not issuing these documents through this electronic platform. There is a daily penalty, 1,000 penalty if supplier or recipient failed to intimate the system failure to the tax authority within the prescribed time mentioned by the ministry. That prescribed time period is not provided at the moment. So we will be able to understand this later time. There is a 1,000 penalty also applicable if there is any data change in your ERP system, which need to be communicated to the ASP, appointed ASPs. So coming to the functional gap assessment perspective, So a successful UAE implementation starts with a structured gap assessment process, which helps businesses understand where they stand today and what needs to be changed in the business processes or automation requirement in the system perspective. Firstly, we perform a current state review. This steps looks we look at the existing processes, current billing systems, what is the order to cash workflows, data sources that you use for invoicing purpose. The next stage is the requirement gathering. Through various stakeholders discussions, meetings, we capture the business models, what you are following, tax requirements, VAT treatment that you follows in your business, that will be analyzed. Then a detailed gap analysis will be conducted. In this process, we identify the gaps across the data, processes, and systems, how you are reporting to the VAT returns and how these need to be changed from e-invoicing perspectives will be analyzed in the details during the gap analysis process. Transactions mapping is a critical area in gap assessment. All business transactions are mapped to the 16 business use cases provided by MOF. Out of the 16, we identify special use cases, whether it is applicable or not in your business. If it is applicable, then there is a requirement for additional data fields that will also be considered during the gap assessment. Finally, we prepare a gap assessment report with a business requirement document, which will be useful for any ASP to implement the electronic invoicing system in your business. Key implementation challenges in when we are talking about a system transformation, it's not like corporate tax implementation or VAT implementations. It is a transformations of all which covers tax point as well as your systems. So there could be challenges from system perspective, from operational or governance perspective. From an operational perspective, invoices can no longer be cancelled at any point of time. So that is the critical area that within e-invoicing regime, in case if you want to cancel any invoice, you must issue a credit note, or any other changes need to be done on the originally issued electronic commercial invoice or invoice. It has to be supported with a credit note. So there could be validation errors often caused by incorrect data that can lead to an invoice rejections by ASPs. So that data field mapping is very critical. So that is another operational challenge. So therefore, data quality there becomes critical. From a governance and compliance perspective, e-invoicing requires a close coordination between your tax, IT, and finance and operations teams, because they know the business models, what is the process that currently they are following for issuing an invoice and receiving an invoice. Even purchase invoices as part of electronic invoicing framework. Therefore, the current AP system process need to be aligned with the AP team and AR team. Any mismatch is need to be immediately visible to the tax authority, and or they will also trigger audits, because in case if you do not implement the invoicing properly, real-time basis, there is a real-time basis reporting to FTA. So they can easily identify the anomalies in your reporting, and that can lead to tax audits in future. This would be a very important slide. When businesses hear e-invoicing as a term, the first reaction is often that I receive from my clients, is it an IT change or system change? Why an tax consultant is involved in this project? But in UAE, e-invoicing is fundamentally a tax-driven regulatory transformations. This requires the VAT readiness also need to be captured into the e-invoicing readiness. So there are 4 points that I wanted to touch base here. The first one is the treatment accuracy, VAT treatment accuracy. UAE e-invoicing operates in a real-time reporting environment, meaning VAT treatment errors are no longer discovered at a later stage. So which means any VAT error that you report or you automate now without having a proper assessment, it is reported to the FTA on a real-time basis. At present scenario, you are questioned only when you are subject to tax audit. But in future, after e-invoicing, you are questioned immediately from the tax authority. So VAT treatment accuracy is a mandatory part. Then second one is the in e-invoicing use case mapping. The 16 use cases that we identified in data fields are very central and backbone to e-invoicing regime. These use cases are not IT scenarios. They are tax driven or tax business scenarios. We have to correctly map, the consultants need to map these real business scenarios to the correct MOF use cases, identify which mandatory and conditional data fields are applicable in each use cases. This will prevent misclassification that may otherwise pass the system checks, because you can issue an electronic invoice even if your VAT treatment is incorrect or data field mapping is incorrect, but system perspective, it may pass that validation, but for audit purpose from the FTA, it may fail. So you may need to do that carefully. Compliance and risk mitigation. An accredited service provider focuses on technical compliance, but from transformation, they will also focus on formatting, transformation, connectivity between your system and their system. But from a tax consultant point of view, we focus on a regulatory compliance and risk mitigation perspective. We that compliance test or checks includes ensuring your invoice reflects actual legal substance or transactions. Preventing this will also prevent our compliance breaches that may trigger FTA audits, penalties or refund delays, etc. So that will also part of the consultant's job. So that's the reason we say that it is not only a digital transformation or system transformation project. It also requires a consultant to be or VAT expert to be involved. So the last one is some key takeaway. I would like to end my presentation by providing some key takeaway. The first and foremost is where you start early. The implementation timelines will be very tight, and invoicing is not something that you can solve immediately or within a week time. Early preparation is always a key. Second one is the data accuracy is absolutely critical. In real-time reporting, if the data is not correct, you will find errors in master data, VAT treatment, or invoice logic might be going wrong, etc. Alignment across tax and IT functions and everything is important with respect to smooth implementation of invoicing. You need to test these scenarios extensively before go live. Validation errors can be identified well ahead of time. That can be easily done, corrected at the right time. You need to also seek expert guidance for invoicings, as there are certain things that compliance and regulatory perspective need to be adhered. So with that, I would like to say thank you for joining us today. I hope this session was provided clarity, practical insights, and clear roadmap for a successful implementation of invoicing. Now, I wanted to hand over this platform to Umesh, my senior manager in indirect tax, who will be providing some insights about key VAT regulatory updates. For now, you can take my contact details. You may contact me for any invoicing query or any support. Yes, Umesh, I would like to invite you to take this forward. Thanks. Thanks, everyone.
Thank you, Deepak. Hi, good morning, everyone, and thank you for joining today's session. We will be discussing some key changes in the VAT legislation and some changes in the penalty regime, what the VAT law says on VAT scrap sales, alternative custom procedures, and the role of tax agents in the present scenario. So moving on to our first topic, which is for the VAT law and tax procedures amendment. So mainly there are three types of legislations that have been amended very recently. We have noted here some key major changes in those legislations. We'll start with VAT decree law. It's effective. The new legislation is effective from 1st January 2026. The first type of change is in the reverse charge mechanism. Earlier, the registered buyers or the people who were registered for VAT, who were receiving services from overseas entities or importing services, they were required to self-issue invoices. Under the new legislation, it has given some laxity, some flexibility, where if you're able to maintain an overseas supplier's invoice in your records, you're not required to self-issue invoices. The next change in the VAT decree law is in Article 54, tax evasion related input VAT. FTA empowered to deny evasion-linked input deductions. So here, the FTA has been given more powers. They can deny input VAT if they suspect evasion, tax evasion. So this puts more burden on the buyers who receive invoices with VAT from their suppliers. So merely just checking the mathematical accuracy or the compliance of an invoice is not enough. The buyers will have to see beyond that. They will have to check whether the input VAT that they are claiming has any discrepancy or contains any major tax evasion case. So that's what the Article 54 says. Moving on to Article 74, Clause 3, this defines the time limit for the claiming of input VAT. Earlier, the tax registrants have the liberty to claim input VAT indefinitely. There was no limit as such. You can claim input VAT on a tax invoice, that a tax return that relates to 2018, older than 5 years. But that has changed now. We will discuss this in more detail later. The time limit given by the Federal Tax Authority is 5 years on input VAT, on refund claims. The next article under the VAT decree law that has gone under change is the statute of limitation. This has been removed from the decree law and has been moved to the tax procedures law. Moving on to the new type of change in the tax procedures law, Article 9, Clause 3, time limit on using credit balances. So here the Federal Tax Authority has been given the power to offset any of your liabilities against your refunds. So any refunds that you hold for 5 years, the Federal Tax Authority can reset or can offset those refunds against any VAT liability or any administrative penalty. Article 10, Clause 5, correction of errors with no tax differences. FTA may mandate VD even without tax differences. So the tax registrants earlier had this practice that where the correction in the VAT return results into no VAT liability, then they would adjust such kind of errors in their upcoming VAT return. So for example, zero rated or exempt supplies, people had this practice of adjusting such adjustments in their upcoming VAT return. But this has been changed effective 1st January 2026. Voluntary disclosures have to be submitted for these kind of changes. So for example, if you're changing your zero rated supplies or your exempt supplies, or there is change in Emirates-wise reporting, you reported something under Dubai, whereas you should have reported it under Sharjah or any other state, then that can go only through voluntary disclosures. You do not have the liberty any longer to correct it in the upcoming VAT return. Article 38, application for refund of credit balances. This is an elaboration of what we discussed earlier on VAT decree law, Article 74. It says here that credit refunds can be claimed for a 5 years period. So if you have a credit or some refund from the Federal Tax Authority relating to a VAT return, then you can claim it within 5 years from the end of that VAT return period. Article 46, Statute of Limitation. This gives 2 years extension to the Federal Tax Authority relating to VAT refund claims. So mainly this is about if you submit a refund application today relating to a VAT return which is 5 years old, near to 5 years old, then the Federal Tax Authority can extend your audit for 2 more years. The background here is that Federal Tax Authority can check your records. If you are a non-real estate entity, the Federal Tax Authority can check your records for up to 5 years. In case of real estate entities, the Federal Tax Authority can check your records for up to 15 years. But in the case of refunds, if you're submitting a refund application to the Federal Tax Authority on a VAT return which is 5 years old, then the audit period can be extended by 2 more years. Now we'll move on to the next legislation, which is Tax Procedures Executive Regulations. This is effective 1st April 2026. Article 3, record keeping in light of statute of limitations. So extended record keeping requirements are there related to refund cases. Again, if the Federal Tax Authority has earlier described in Article 46 that they can extend your audit by 2 more years, that by default means that the taxpayers or the tax registrants should keep records for 2 more years, not just relying on the previous 5 years records. Then we'll move on to Article 10, submission of voluntary disclosure. Earlier, the VAT legislation has been that if you have underpaid to the Federal Tax Authority by more than 10,000 dirham, then you were supposed to submit such an error under a voluntary disclosure. But as per the new legislation, new change in Article 10, where you have submitted a VAT refund application to the Federal Tax Authority and you have claimed VAT by more than 10,000 dirham, you will have to submit a voluntary disclosure for that if that is incorrectly submitted. Next, moving on to Article 18, 19, and 28, this describes extended features and audit. So the Federal Tax Authority can keep your records for an extended period of time. They have established certain timelines within which the Federal Tax Authority must respond to their taxpayers on the outcome of the audit. Next, Article 26, credit balance refund procedures. Again, this describes the same VAT refund procedures that the refund applicable on the 5 years period. All taxpayers must submit VAT refund application within 5 years. With one very good approach that you can adopt in the current year that has been given by the Federal Tax Authority is that you can claim input VAT older than 5 years in 2026 only. So if you're submitting a VAT return in 2026, if you're submitting a refund application which is older than 5 years, you will be able to submit it. That will be legitimate VAT refund claim, provided you meet the criteria. But after the passing of 2026, you will no longer be eligible to claim input VAT or refund on these VAT returns. Our next topic is revised VAT penalties, Cabinet Decision number 129. We've taken the key penalties and mentioned it over here. The first type of penalty is when the Federal Tax Authority or the authority requests from the tax registrants or non-tax registrants any records in Arabic. And if you are unable to provide those records, the penalty is 5,000 dirham. Earlier, the penalty was 20,000 dirham. So the penalty has been reduced. If you're seeing the slides, the penalties overall in most of the cases have been streamlined and reduced in certain cases compared to the previous legislation. Failure of the registrant to inform the authority of any case that may require the amendment of information pertaining to his tax record kept by
Umesh,
authorities. So if you have changed, if you have VAT, if your profile has changed, for example, your authorized signatory has changed, these kind of changes can be submitted to the Federal Tax Authority within prescribed timelines. If you're not doing that, then the fine is 1,000 per violation. This increases to 5,000 dirham if you're submitting such a change with the second attempt,
yes.
with the repetition.
Great, great. Umesh, sorry to interrupt you now in essence of times and by respecting everyone's time. I think we missed out a lot of things, and because it's at 12 o'clock, so we cannot continue above it. And thanks for everyone joining. It's like overwhelming response. 550 participants was there. And we have sent the link for the registrations to contact us further to you, as well as Deepak will share the QR code on that. So Umesh, we can have a next week or within 15 days, we can have another webinar based on the whatever is missing right now. Even I left with the like my AI tools and other things. So I'm again very much thankful to all the participants in that, and we will take on this in the next sessions. Hopefully, Deepak, can you show the screen QR code? Yes,
Yes.
and the
So
link is also mentioned into the chat. Infal will post it again, so it will be available latest in the line. So please feel free to get in touch with us for any sort of query, and Crow will be always available to you for any such services. Thank you, everyone. We are keeping this QR code for few times, 5 minutes. Anybody can scan it and send us.
thank
Thanks for
you.
joining, everyone. Thank you. Thank you very much.
Binit, I think we can drop the webinar now.
Yes, I think people have scanned it and hopefully everything has been done.
Thank you.
Thank you. Thank you, everyone.
Thanks, everyone. Bye.
Thank you, guys. Thank you. Have a good day.